In this video, we're going to be going over managing losses and what to do when you take an L. Let's get into the video. So one common thing I see with new traders is they get down on themselves when they take an L. But when you have a proven strategy and trade setup and you know you're going to get X amount of money when you take a trade, then taking L's is just part of the trading business and you have to deal with them over time. So in this video, I'm just going to be breaking down this AMD loss I took and how I plan to bounce back from it. Let's just jump over to trading view. So I took my first initial position right here on AMD August 5th. I got the 120 calls for October 21st, I believe. I got the first contract for about 320. Now I took a small start position with about one contract here and I rolled it out from a 105 call. So my idea with this trade was pretty much I was already locking in profits because I got in early from this move on AMD from about like $92 up to highs of 104. So I figured I'd just roll it, and AMD was likely to hit probably like 110. I probably fill this gap up here at about 160 and 120. This was my profit target on this trade. So I rolled out. My first initial mistake on the trade was I could have waited to get a better entry on the trade, but I just decided to roll up and out all in one trade. So I closed out my 105 call and rolled out to the 120s. And then as you see later on, I started kind of averaging down, and then the contracts were like at lows of 160 when I was averaging in. So if you look here on my chart, I'm on the daily time frame on AMD right now. So AMD kind of broke over this macro downtrend. I opened my position right here on August 5th, this vertical line. It kind of pulled back to it, bounced off it. So I started adding a few more contracts down here about $1.08. So by this time, I got my initial contract right here like 320. The contract already pulled back about like $1.40 per contract. I saw it bouncing on this macro downtrend, so I figured I'd average in about three more contracts. So I got 3 more contracts down here about $1.06. And AMD kind of came back up here. It back tested this key level right here at 102 and came right back down to the macro bear trend. Ended up closing my position here on August 22nd. My ultimate stop out was below this low here at $93. So for the final loss on this trade was about $500 total. Which is kind of rough, but like I'm going to go into, knowing you have an edge in the market, your trade setups are going to make money over time is what keeps me going, and it's not really that hard to take an L in the market. Now, a lot of new traders I see, they don't have a trade plan. They take an L and they get really upset with themselves. They get frustrated. But me, I went into this trade having a trade plan. I got in a little bit early. I could have waited and got a better entry up here. But of course, I had an ultimate stop out. So when price came down here, I'm double bottom off 93, 94, whatever this low was. I could have sold here for about a loss, but I decided to average in because I was holding a small position, about 1 or 2 contracts. So I went in with about 3 more right here. And when it back tested this level, I was about break even. I could have cut for a loss, but the risk reward wasn't really there. If I was willing to hold down about $200, it doesn't really make sense to sell for break even. So I figured I'd let this one play out. And this is why having a trade plan is so important. If I were still holding this trade after making this video, as price continued to break down through my kilo I was watching, then this trade would have been down like 60, 70% at the time after making this video. Instead, I could just take a loss and move on to the next trade and try to make the money back, a better trade setup and one that's more profitable, because I know taking trades off kilos is going to make me profitable and it's a strategy that's worked for me. And moving a little bit forward, so pretty much after I averaged down the position and I got my 3 contracts down here roughly, so this would have been my risk reward on the trade. So roughly I was risking both these lows. Like I mentioned, I stopped out around down here. So I was risking about total like 90 cents on the contract total. Reward on this trade was up to here roughly. If contracts went near the end of the money, it would have been about a 9-to-1 risk reward. Now I would have obviously scaled out probably at highs like 110, scaled out along the way up. But my final contract would have been up here roughly, a 9-to-1 risk reward. So this is why having a defined trade plan and a trade strategy is so important, because most traders, they just buy calls in random areas. They don't know the risk reward. They don't know they're going to stop out. They don't know where they're going to take profits. But for me, after I got my cost basis down a little bit lower, I could have taken profits here at break even roughly on the trade, but I held through it. I had a trade plan. I didn't panic. It broke my stop loss. I just cut the trade. And sometimes people have an issue cutting trades because they don't have a trade plan. But for me, I had a clear trade plan. I knew I was going to cut below this key level at 93.5. It broke that level, so I just cut. I don't even have to think about it. And I know that over time, taking trades off key levels and using supply and demand is going to make me profitable. So no, moving into the next trade, I don't have to worry about it. I found this article in Zach's here, kind of going over losses. I couldn't find the original tweet I was looking for, but regardless, it pretty much reiterates why risk management is so important and why you have to be utilizing it while trading. Now, I could have let this trade go to zero, lost my, $1,200, $1,100, whatever I had in the trade, something along those lines. But if my investment goes to $0, I have $0 to trade with. I cut the trade about down 50%. So I only really need 100% return to make the money back. And that might sound unrealistic to some people, but knowing my strategy and knowing how I trade, a 100% return isn't that, unusual for me. And I can make that back with a good trade setup. And this is why having a trade plan is so important, because some traders, they let their trades go to zero, down 90%, down 80%. But like this article says, if I was to let this trade go down 80%, my next trade, I would need to make about a 500% return to make the money back. Especially for swing trading, like I said in my previous videos, you need to be comfortable having whatever risk you have in the market. If that goes to zero, hypothetically, you have to be comfortable with that risk. Now, I'm not scared about losing $1,200. It's not really a lot of money. But if it did, yeah, it sucks losing money, but I'm confident in my strategy and my abilities to make that money with more trades or compounding it over time. Regardless, always having a trade plan and just keeping it in the back of your head. I could have cut this trade at about, down 10%, but in order to make another 10% gain, I would have only needed 11% return to make the money back that I started with. So just keeping losses smaller, and then your wins won't have to be that big to, overlast your wins. And this is why I wasn't so concerned taking an L in this trade, because my previous trades on AMD were like 150% returns, 200% return. So taking a slight 50% loss on this trade doesn't really hurt me that much. I just gave back a little bit of profits, so I wasn't really worried. And it sucks losing money, but it's part of the stock market, and I know with my trade plan and my trade strategy, I'll be fine in the long run. So before I go, I just want to break down the options chart for this AMD call I took. So like I mentioned, I took my original position here on August 5th. Would have been over here actually. I got the contract right here at 320. I rolled up and out. I closed the 105 calls, opened the 120s. I bought one contract here at about 320. Kind of went up for a little bit, and then AMD kind of fell, like we saw previously, fell down to 130. So the contract fell almost 30% or 50% in a single day. And I only took one contract up here, so it was like a small. I would have been down. I was down like roughly like 180 at this time. So I had 1, 2, 3 more contracts right here. I got my cost basis down roughly in the 2.6 area, and price went up. I was break even for a couple days, or for like half an hour, and price pulled back, kind of died down slowly. I had one more contract here, 1.5. AMD hit 102. I was pretty much break even. I could have sold yet again, and then sold off, and I cut down here at like about 90 cents. So in total, my total cost basis was around like $1.95 at 6 contracts, so like roughly like $1,200 or $1,000, somewhere in that range. And I cut down here at $1.90, so it was about negative 53% return. Now, like I mentioned in the TradingView example, if AMD, ripped up to like $6-7, I would have held like maybe 2 or 3 runners. So like I mentioned previously in the TradingView example, but it's easier to see kind of on the options contract because you can see my prices and everything. So I was risking this much. I cut down here at $1.90 when I broke below that kilo at 93.50. So I was risking this much on the contracts. Now if you take this and copy it up a few times. Now the last few contracts, if AMD would have got going towards like 110, filled that gap to the upside, it was roughly like a 4-to-1 risk reward trade. So I lost $500, but the trade setup was there. If price would have gone up, it would have been like a 4-to-1 risk reward, especially once I got my cost basis down to $1.95. I really like the trade setup. If AMD and semiconductors made a move, it would have been a really profitable trade. But you live and you learn. The stock market, you take losses sometimes. And then the sooner you realize you take losses in the stock market, everyone takes L's. If someone you follow says they don't take L's, they're lying to you. But the sooner you realize that, and you just manage your risk appropriately, and you keep money to continue trading, you're going to end up being profitable if you keep at it and trying to learn every single day by watching videos like these ones. Now, this video helped you, or you learned anything, just drop a like and comment below, and stay tuned for the video on Saturday. See you later.